Joining us now, MoffettNathanson's Michael Morton. He has a $118 price target on the stock and an outperform rating. Michael, there's so much to talk about here. We typically talk about AI and AWS, but you're focusing on the very basic business of groceries. And I'm so curious, you write here that the future of e-commerce growth is grocery, but there's some signs that Amazon is really struggling here. They just laid off some workers at their brick and mortar stores. What is your outlook for Amazon's piece of this grocery business?
Yes, thank you for having me on this morning. We did put out a recent report discussing Amazon's venture into grocery. It's something they've been working on for many years. And we did a price comparison of how a basket of an average consumer goods for groceries would compare across the list of competitors, Walmart, Kroger, Target. And we found that in a rare case, Amazon is not leading the pack. They're more middle of the pack, probably at a 25% premium to a basket of goods from Walmart. And there's been a lot of recent press releases that have come out from the company, even in the last week, allowing non-Prime members to shop with groceries on Amazon. They're changing the distribution model. We're excited to learn more about it. We just think that this huge category of grocery and non-discretionary that represents $2 trillion of consumer spend is the next channel for growth, and it's something that we've been focused on. But it's early days, and there's still a lot of learnings to be had in that department. For this quarter, go ahead.
No, I was just going to say the higher margin businesses are still things like apparel and also electronics.
Yes, absolutely. The high margin retail categories have been effectively attacked by e-commerce players. They're easier. They're not time sensitive. You can pack up a shirt in a small package. Electronics are dense. And the e-commerce industry has done a great job taking share from legacy brick and mortar. Now, the remaining pool that's left is what we refer to as grocery and non-discretionary. And that's a who's who of really capable competitors. And it's also a structurally low margin business of a low single digit type of margin profile. So it's intimidating to hear any new players entering this space.
And then in terms of this Amazon Web Services business, what's your outlook there? What do you think we're going to hear?
Yeah, absolutely. So our grocery question is more longer term focus and how they're going to go about it. On the call tonight and the results, I caution anybody from making quick judgments when you see the press release come out, because really what investors are going to want to hear is on the call how AWS is trending basically on a monthly, quarter to date basis. This caught everybody by surprise. Last quarter, you saw the stock go up and then down as people were surprised by the trends. And as you know, AWS has been the profit driver for this business for many years, adding roughly like $17 billion in revenue every year. And then it rapidly decelerated as clients have gotten more frugal on how they're allocating their dollars. What we really want to see here is this business meet expectations, right? It doesn't need to blow investor expectations out of the water. Meet expectations, and what that will allow to occur is the retail performance that's doing really well. If they've improved on the fulfillment and shipping costs, the profitability will be able to flow down to the bottom line.